So good afternoon, everyone. I'm Doug Jones, President of the Vancouver Island Chapter 19 of CARP, and I welcome you to this hybrid meeting. There are those who are present in this wonderful conference room at Ocean Networks Canada, and those who are listening simultaneously on this broadcast, and those who will be watching later on the recording. So I'd just like to acknowledge and respect the many First Nations of Vancouver Island and the Canadian Gulf Islands of the Salish Sea, on whose territorial land CARP Vancouver Island Chapter 19 operates, and their peoples whose historical relationship with the land continue to this day. Just a little bit of housekeeping here. First of all, if you'd like to add your name and where you're located in the chat box, that would be nice for us. And then when you have questions, enter them into the chat box or raise your hand at the end. You can speak as well at them. We'll have a look at that at the end. Please keep your questions brief, though, so that we can have a maximum number of people who are participating, and hold your questions till the end so that we have some respect for the speaker who can finish what he's talking about. This is being recorded, and the recording will be available on YouTube. It takes about a week to get that onto YouTube, but we will have that on YouTube, and information will be on the Facebook page as well as information that's going out. We'll try to end the meeting promptly at 3 o'clock. So I'm very pleased that Matthew Moreau is here to talk to us about climate change effects on home insurance. Matt, as you know, is a data analyst with Westland Insurance and a former insurance broker with 6 years of industry experience. He will also be presenting some of his master's thesis in economics, which explores the relationship between climate parameters and weather-related insurance claims in BC, and how that climate change might alter our home insurance and current industry trends relevant to CARP members. As you know, greenhouse gases have resulted in climate change, evidence of which is very much of evidence in BC and across Canada, with the wildfires and floods already having their influence on many insurance claims. And as I'm sure you're well aware, this will be having an impact, I think, on all of us going forward, as the claims going up will obviously influence the business plan of insurance companies when they're dealing with risk versus cost management. So with that, please join me in welcoming Matt to the podium to provide his insights. Matt, I'll stop sharing now, and you can continue on from here. So if I stop sharing, you should be able to share.
Thanks, Doug, for that introduction. Share my screen here. Great. All right, so let's get started. Today I'm going to be presenting on climate-related risks and home insurance, which is the subject of my master's thesis at the University of Victoria. So before we get into it, I'll do a quick introduction about myself. So like Doug said, I'm a master's student and a data analyst at Westland Insurance. I've worked as an insurance broker for about 5 years. And I'm also a Victoria native, so beautiful city to live in. I'm sure that's why all of you retired here. This photo was taken a week ago. It's a family vacation in Ireland, and just got back a couple days ago, so still recovering from jet lag. Okay, so what we're going to be going over today is the main topic will be my master's thesis, and I'll stay fairly high level on the research. Then I'll talk about industry insurance trends. So this is how you as a policyholder expect to be impacted by climate change. Then I will share some tips for you when talking to your insurance brokers, what coverages are important and how to bring your premium down. Then I'll share some info about the company I work for, Westland Insurance, and if you still have time, we'll open it up to some questions. So one of the questions I've been asked is, how did you choose your field of research? And I chose this in 2021. I was a first year's master's student working as an insurance broker, so I already had some domain knowledge, I guess you could say. And I was dealing with clients, and I kept getting phone calls about a lot of insurance claims in 2021. And what I found was most of these insurance claims were climate related. And what we can see here from the figure is that climate related losses have almost doubled in the past 5 years. So these are figures from Canada, from the Insurance Bureau of Canada. So 1.3 billion in losses paid out by insurance companies in 2019, and we're up to 3.1 billion paid out in losses in 2023. So this kind of prompted me to look more into this. Working at Westline Insurance, I had access to proprietary claim information. And so if you remember 2021, it was a particularly bad year for BC. We had the Lytton forest fires, and this was all over the news. We had record-breaking temperatures of 50 degrees. I can hardly stand 30 degrees. I wonder what 50 would be like. And over $102 million in insured losses were paid out. And what researchers were saying about this event was it was so rare that for it to have happened without the contribution of climate change would almost be impossible or highly unlikely. And another big event that we had in 2021 was the atmospheric river. So this was the flooding of the Sumas Prairie region that you'll see on the screen here. Critical infrastructure was damaged. Remember that the main transportation from Western Canada into BC was cut off. And there's $675 million in insured damage. I remember that even the gas pumps were out of gas here in Victoria. Everyone was rushing to fill up because they weren't going to know when those supply chain disruptions were going to be resolved. So these big events is really what prompted me to start this research. So to answer this question, I pulled together data from 3 different sources. So first of all was the claim information from the place I work, and also weather information from the National Oceanic and Atmospheric Association. And I was able to link these 2 data sets together using geospatial data from BC Assessment. So every single dot that you see here on this map is a claim that happened in BC between the years 2001 to 2021. So relevant to CARP members here, you can see a lot of dots on the map here around the Gulf Islands and Victoria. So I can put together 2 different data sets to answer 2 different questions. So one, the frequency of claims, are they increasing? And also the severity of claims, are they increasing? Okay. So you'll hear me mention 2 things. One is the frequency data set and severity data set or model, and that's what I'm referring to. Right. So this here is a graph that shows how many claims happen in each year from weather events. So we classify weather events as claims that happen from rainstorms, wildfires, and windstorms. And you can see here that there appears to be a increase over time, but also there's the number of policies insured is also increasing over time. So it's not enough to just look at this graph and say that claims are more frequent. We also need to control for the number of insured risks, which is where multivariate modeling comes in. So this is the result from the frequency data set. We have what's called a marginal effects curve and a histogram of observed temperatures. And what this tells us is that as temperatures increase, the frequency of insurance claims also increase. And maybe that's not too surprising, but it is important that we control for all other variables to just say, what is the effect of just temperature alone on claim frequency? And we can see here that this is a highly significant relationship for claim frequency and temperatures. And when we ran the same analysis for severity, we found that there was not the same relationship. So we can kind of see the predicted severity is flat over the marginal effects curve for the entire temperature range. So what does all of this mean? The main argument is that a rise in global temperatures of even a couple degrees is going to significantly increase the frequency of extreme weather events, but not the severity of insurance claims. All right. So what does this mean for policyholders? So this is the part of the presentation that's a little bit less scientific and more based on my opinions as an insurance professional. So the first thing I know that's already happening is that insurance companies are becoming more strict in their underwriting in terms of what they're willing to insure. And you could be at a particular risk of being able to being unable to find insurance if you are in an unprotected area. So that's if you are more than 8 kilometers from a fire station or more than 300 meters from a fire hydrant. Here, insurance companies are finding that these risks are harder to insure because they're close to wildfire areas. And also high-risk earthquake zones. So being here in Lower Vancouver Island is a particularly high-risk earthquake zone, and also in the Lower Mainland. So we've already seen this happening with, if anyone lives in a condo and has strata insurance, the earthquake rates for strata insurance are going up quite a bit, and in some cases, not able to even find insurance at all. Another characteristic of policies that will be unable to find insurance is if you live in a flood zone. So if you live close to a river, chances are your current insurance policy will only cover you for a basic limit and not even the full value of your home. The other effect that we're going to be seeing on insurance is annual increases in insurance premiums that are going to outpace inflation. So the rates that I've seen is condo insurance rates in 2024 rose about 15 to 25%. So people are seeing these increases on their renewals. And home insurance rates are a little bit lower, but they're seeing around 10 to 20%. If you have a tenant's insurance policy, these are less volatile in terms of the increase in premiums. So insurance companies have a couple different levers they can pull to adapt to these climate risks. And some of these have been around for quite a while, but I think they're worth mentioning here. Insurers diversify climate-related risk through reinsurance. So if you've never heard that term before, it's basically insurance for insurance companies. So no one insurance company is going to insure the earthquake risk on Vancouver Island. When they sell an earthquake policy, they diversify that risk away to other insurance companies in the United States and across Europe. So that way they can remain solvent if the big one hits, so to say. Another lever they can pull is subscription programs. So if you look at your insurance contract, you might actually see not one insurer, but a multitude of insurers. And this is another diversification strategy. And these diversification strategies will work as long as these extreme weather events are localized to one geographic region. And Another thing to point out is that flooding and water damage in particular is the most common claim for habitational insurance. And for this reason, insurers tend to limit the coverage for flood and water damage very heavily through their wordings. And what this has prompted in other areas of the world, the United States in particular, they have a government insurance program that covers flood risks. So for all those homes that are down in Florida that are getting hit by hurricanes, private insurance companies aren't insuring those homes, the government is. And there's been talk about a similar program being rolled into Canada, but we have yet to see anything materialize from the federal government yet. All right, so I'm going to share some tips for policyholders, when your policy comes up for renewal. And I'd like to add the caveat that I am no longer a licensed insurance broker, so any advice here, please consult your insurance broker for making any changes to your policy. So the first recommendation I'm going to have is purchase earthquake insurance. From my experience, about 60% of policyholders carry earthquake insurance in Lower Vancouver Island. And many do not, simply because it's expensive. But I would argue that because it is more expensive, you should consider purchasing it. Price is significantly correlated with the risk of the coverage. So a higher price coverage means it's going to be higher risk. And my advice to policyholders is always insure yourself against losses that you cannot recover from. There's a 9.0 magnitude and your house is demolished. If you don't have $500,000 in the bank to rebuild it, you should probably purchase earthquake insurance. The other piece of advice I would give is to shop around a policy renewal. Now, the marketing team at my insurance company might have a different opinion on this, but I will tell you that loyalty to a specific insurer is not always the greatest thing. Insurance companies will increase you year over year, and sometimes your rates can be higher than what a new business policy. If you walk in the door, they might give a better rate to a new client. And insurance companies do this because they're trying to get new business. They have to get you in the door somehow. So shopping around is worth it. And if you're a current insurance broker and you don't want to leave, but the prices are increasing, you can get quotes and bring that quote back to your current insurance broker, and they may be able to lower the cost for you. The other piece of advice is choosing a higher deductible is a good way to lower your rates. So it makes sense to choose a higher deductible if you're only going to use your insurance in the event of a major loss, because most of the time the insurer's wordings will waive the deductible if the loss exceeds a predefined threshold. So for instance, at Westline Insurance, that threshold is $50,000. So if your loss exceeds $50,000, you don't even have to pay a deductible anyway. All right. So the last thing I'll go over here is a little bit about the company I work for. We were founded in 1980 as a single family owned brokerage in BC. And now we're one of the top 3 brokers in Canada. So we have several insurance locations in Victoria, one in Saanich, Langford, Colwood, and Vic West. We also have a branch in Salt Spring Island and 15 branches in total on Vancouver Island. So if you ever need a second opinion on your policy when it comes up for renewal, you can go to westlineinsurance.ca. One thing I'll mention about our company that's very unique is that we handle all our own claims in-house. So we don't contract with a third party to handle our claims. So we're able to keep the client experience really good when it comes to when you actually have to use your insurance. We do business, home, and auto insurance. Great. So with that, I guess we'll open it up for questions.
Okay. Thank you very much, Matt. If you can shut down your share screen and I'll see if we can get everybody else back on here with the gallery view. So there may be others who have questions they want to raise, and then if you can put the chat on, there may be something coming through the chat that you can respond to as well. But I'm going to start off by asking the question of, there are those, as you just mentioned, that are now having difficulty getting insurance but had it before, whether they're in a floodplain area, whether they're an earthquake area. And I'm wondering whether or not any of the proposed policies, you mentioned government insurance for flood, but are there other things that they have now done to mitigate things like flooding and to improve the areas that had experienced floods in the past that may influence that going forward? Or is that just part of the fact that this is a company, they're all companies, they're in it to make business and make a profit, and so once they go up, they'll never back down?
Thanks. So the first thing I'll mention is that if one insurance company denies coverage for you, that doesn't mean that all insurance companies will. So underwriting criteria varies from company to company. So if you're declined one place, you can always shop around another place and hopefully find coverage there. In terms of mitigation, I haven't heard of anything that has helped that situation, but on the individual risk level, you can always do things to prevent losses. So insurance companies, if you have a claim, will sometimes say, okay, we need you to implement some risk measures for us to continue to insure you. So if you live on a hill where there's lots of torrential rainfall, they might advise you to put in gutters or something to mitigate a future claim. And then in those cases, if you implement those measures, they'll continue to insure you.
Okay. Do you see anything in the chat? Yeah, it's coming through for the question. I just want to make sure we haven't missed something.
No questions.
Okay. So another question I have is that you mentioned increase in the insurance premiums in 2024. I've certainly seen that in my own case. And the increase, I think, over 2023 was about 18%. Certainly, that's probably not too surprising. I also wonder, though, many years ago, there used to be a thing in insurance policies that said act of God, that they wouldn't insure you if it was an act of God or terrorism. There were two that I recall in an old policy that I had. Is that terminology still in use?
On the wordings in Canada that I'm familiar with, act of God is no longer in use. But in other wordings are still in use, like terrorism, nuclear event. These big catastrophic things are usually always exclusions on insurance policies. So generally, most habitational policies are sold today are comprehensive policies. So that means everything is covered unless specifically excluded. Mm-hmm. So in order to find out what you're covered for, you just read the exclusions on your wordings.
So I think that's the other key element that is part of the advice you give people is make sure you read everything in the policy, right?
Absolutely, and especially when you're shopping around, if you get wordings from another broker, make sure you review those and compare those with your current policy, because a drop in price might mean you're just getting a worse coverage.
Mm-hmm. So, any other questions?
Yeah, there's a question in chat here. Mm-hmm. Do you handle marine insurance for private boats? And the answer is yes, we do. We have a Westland marine insurance program.
And is it part of the same company, or is it a separate branch, or is it just you can have one of several types of policies?
Yeah, so Westland is a fairly unique company in that regard, where we operate as an underwriter, an insurer, and a broker. So we're vertically integrated. So most of the policies we'll try to place you with are our own in-house programs. But if we always have the option to shop around with other insurance carriers, to provide other options. Yeah.
Another question I had was, you mentioned the size of this Westland in Canada as being one of the larger ones. I would have thought that things like some of the banks and some of the trust companies would also be in the insurance business, and you have things like Manulife and New York Life and Sun Life and several of the other international players who are also in Canada. So when you say that, are you only talking about Canadian companies?
Yeah, so we're talking about Canadian companies, and we're also talking about brokers, which I will differentiate from insurance companies. So some of those big carriers, I think TD is a big one. The other big one is Intact Insurance. Those are some of the biggest carriers in Canada. But in terms of brokerages, Westland, I believe, is top. I believe third. Yeah.
So, yeah, I'm trying to clarify in my own mind the difference between an insurance company and a broker. And it seems to me that most brokers are not insurance companies, but most insurance companies will often deal with a specific broker. Is that the case?
Yes. So these lines aren't always drawn perfectly, but generally speaking, a broker is someone that will try and place you with a multitude of insurance companies. And an insurance company also sometimes have what's called a direct writing program. So they have ways to sell directly to consumers, but mostly they operate on a broker basis. So they'll have these agreements, insurance companies will have these agreements with brokers and to sell their products for them.
We're physically located right now in Ocean Deck, Canada. And as you may know, of course, they have a multitude of sensors around this area, and then they coordinate as well across Canada and through the US and several other places, looking particularly at earthquakes and the potential for tsunamis. In the policy that you're dealing with earthquake, does it also cover the tsunami problem, or is that under water rather than earthquake?
Great question. So tsunamis are a big exclusion on habitational insurance policies. And the way it's worded is that we will not cover water damage from salt water. And that's an exclusion right in the wordings on virtually all habitational insurance policies. So if it's salt water, it's not covered, even if it's caused by a tsunami or an earthquake.
So that would be then the advantage of the US system, because their floods often are coming from hurricanes and that type of saltwater flooding in many cases, although there could be some from rain as well. But is that something that to your knowledge, is that something that the Canadian government is looking at when they're dealing with the potential for having flooding insurance?
Yes, it is something. So the program in the US that I was referring to is called FEMA. And they've been around since the 70s providing flood insurance for high-risk areas along the eastern seaboard and the south of the US there. And Canada has been thinking of adopting that model, but I think it's in the slow stages. So the last announcement I heard was in 2023 of that they're still in doing cost-benefit analysis on that.
I was going to say, based on my experience as a business owner of a security company and looking at my insurance, the fact that people can get detection systems for fire and flood, that needs to be mentioned. Mm-hmm. Because, my policy, I get a fairly good deduction because I have all these flood detectors and all these other detectors in my home.
Absolutely. So the one thing I mentioned on how you can get discounts is deductibles, but another one that you just brought up is these automated detection systems. So one is if you have a flood sensor that will automatically shut off your water in the event of a leak detection, then insurance companies are providing discounts for that as well.
So you mentioned one of the larger increases was in areas for condos. Older condos don't tend to have some of the sensors in the main area or sprinkler system, which are now being required in the new buildings going in. But they often will have either fire or smoke detectors or both. And is that making a difference as well in the relative amounts of what's coming in for the increases in the insurance rates?
Yeah, so the best predictor of whether or not your strata will have high rates is your claims history. So if your building has few water claims in the past, generally rates will stay low. And if your building has more water claims, generally they'll increase quite a bit. So the older buildings are actually, I find, much better, much more attractive to insurance companies because the units aren't as compact. Right, so you have more units in a building, higher square footage for each unit. So that means a single water leak from one unit is unlikely to cause damage to another unit. The condos that are being built today, there's so many units in each building that one water leak in one unit might affect 5 units at once or more. So for this reason, I think that the older buildings are actually more attractive to underwriters than the newer ones.
Another thing I noticed in your projections where you mentioned that the frequency of claims was proportional to temperature. So they seem to go up as the temperature went up. That continues to shift as we're looking across climate change with them going up more. But the intensity or the magnitude of the claims didn't seem to have the same relationship with temperature. And I would have thought that if one of the issues were things like wildfires, and more of that would be a bigger problem with the higher temperatures. And in our case, also related to the fact that we don't have the same rainfall and more drought conditions, I would have thought that also the costs would have gone up with temperature as well. Why do you think there's a disconnect between the frequency and the cost with temperature?
Mm-hmm. Yeah, so the way that we measure severity is the amount that's paid out from the claim divided by the total amount of insurance provided by the insurance contract. So conditional on a claim already have occurring, we look at that severity ratio, and you're right, we don't see that have a significant relationship with temperature. And I believe the reason for that, and this other science is suggesting the same. We've looked at how climate change is affecting hurricanes, and we also see the same thing. We see the frequency of hurricanes increasing with climate change, but we don't see the severity. So, and they measure it a little bit differently. They measure severity by the wind speed of the hurricane like this. But so it is. It does confirm the same thing that we're seeing with other research in climate change.
When you did your evaluation of the claims, and I noticed all the little dots on the map you didn't cover all of Vancouver Island, but you were primarily focused on the south part of the island and the mainland that was adjacent to this area. And I'm wondering if that is because of the population density in the region and therefore the number of claims, versus where there may be more dramatic effects of climate change, which are getting more to the northern part of the province and looking at fires rather than other kinds of climate change effects. Because certainly there's been much more in the way of damage from fire in the northern parts of BC and the northern part of Vancouver Island, and not as much in the south. And the other part would be sort of the interior of BC as well. So north and interior versus coastline where we are mostly on the island. So did you look at any relationship between the geographical, as well as just the area around here?
Yeah, so I did do a truncated version of that map just to show the highly populated areas. And there is definitely the frequency of claims occurring is also proportionate to the population of that area, so that's why we see more. But if I were to explode that map and show the interior of BC, there would also be a lot of claims there as well. And in terms of looking at that kind of spatial analysis, are those extreme weather events affecting more remote areas, I guess. That's not something I looked at, but what we did do in the analysis is control for those spatial differences. right? So we're trying to measure the relationship between temperature and frequency of insurance claims, while taking away those differences from that geographic region.
Any other questions come up in the chat?
Anyone else have any questions in the chat?
Yeah, there's an opportunity for you just to answer your questions into the chat function, and we'll make sure that Matt has a chance to answer those. I guess one of my other questions was, again, going back to the statement that you made. You said that flood is the most common and costly of the natural disasters. I would have expected that unless that was related to other climatic events like hurricanes and heavy rains, that it would be related to that part rather than just flooding itself, where you get just heavy rain coming down and coming off the mountains or a melt.
Yeah, I should clarify when I mentioned that water claims are the most costly for the insurance industry. It also includes water claims that are not caused by weather events. So this is also things like a dishwasher leaking, etc.
Yeah, that would match more in the area that I'm in, where most of the water damage has been caused by somebody else having a leak in one of their places, causing a problem that's here.
Yeah. So in my analysis, I only looked at the water claims that were due to torrential rainfall and flood. Yeah.
Okay. I think there's nothing else in the chat. Any other questions that are here? Well, if not, then I wanted to just say, first of all, thank you very much, Matt, for that overall view of what's there. And unfortunately, a little discouraging for some of us as we're looking for climate change, things that we can affect, and that's going to be a negative component of that. But nevertheless, it is what it is. But at this time, what I want to do is recognize that we did have some door prizes that are coming up today. And Brenda, if you can just bring over the group here, we're going to get Matt to draw the first prize. And the first prize is some of the items that we have from CARP, including a water bottle. For those who are traveling, as Matt has just been, there are some luggage tags in here. There's also an insulated lunch bag and a notebook, or you can either use it as a notebook or as a diary during your travel in the area that's there as well. And a few other items in here, some sunglasses. So if you actually do make it to some place that's sunny instead of raining, you can have that. So if you would just I'll shake this up a little bit for you, and then you can just pick out one name out of there and just read it out.
Okay, we have David Harley.
Okay, so David, this will be yours. We'll get a hold of you by email and arrange for you to either pick it up or we'll get it sent to you. And then the second one, will be, this is a gift certificate from Iris Optical, and Debbie Rasmussen provided this, a $300 gift certificate, door prize. And you should also know that all the CARP members, including the winner of the gift prize, can register through the Advantage benefits that Iris provides, and that gives you $150 towards prescription eyewear, whether it's clear or sunglasses, and $50 off if you're just changing the lenses, and that would be on top of the gift prize. So we have one more gifts to go, so go ahead and take out another name for us here. Okay, and read that one.
All right, we have Amelia Fisher.
Okay, Amelia Fisher. And again, we have your email. We'll get a hold of you so that we can arrange for that gift certificate to come to you. So thank you very much, Matt, for doing that. We're pleased to have those ones as well. And thank you very much to Debbie for providing that. So in closing, I would like to thank Matthew very much for that enlightening and, although somewhat encouraging, also somewhat discouraging information as we're looking at the effects of climate change. And I thank Kate and Amelia and staff at Ocean Networks Canada for allowing us to use this wonderful conference space and the infrastructure for our meeting, and to Debbie for providing the door prize as well. And finally to Brenda for her help in setting up today's meeting and providing some of the coffee. As I mentioned, this will be recorded and will be available in about a week's time. And we hope to see you at our next chapter meeting, will be also the annual general meeting of the chapter on September the 11th. And our guest speaker for that will be Dan Levitt, the new BC Seniors Advocate, and he'll be presenting during that meeting. Details of all of our activities, of course, are in our newsletter. They're going out to membership and also on our Facebook page, facebook.com/CARP Vancouver Island. And thank you all for attending, and for those who will be watching this later online, and enjoy the rest of your afternoon. Thank you again.